To Wall Street, corporate profits are in a state of bliss. To history, the perspective is quite a bit different. With profits at a 7.5-year high in the first quarter, it would be logical to assume that Wall Street would be roaring and the bull market would be entering a new, even more prosperous phase. But as improved bottom line numbers continue to roll through, equities are stuck in a funk. The S&P 500 has gained less than 2% in price for the year, a far cry from the 25% jump in year-over-year profits. While that seems odd on the surface, a look back in time says that's pretty much how it works in the late economic cycles. Investors should remember that the stock market has a keen ability to sniff out inflection points in advance. 20 plus earnings growth is good news in an absolute sense, but it also likely represents a rate fairly close to the ultimate peak growth rate, beyond which the growth rate will inevitably slow. Indeed, the market has been here before, and the results have been about the same. Other than the rare instances when profits have declined by more than 25%, earnings growth of more than 20% has been the worst time for stock market performance. So keep this in mind. In other news, have you heard that Apple futures are spiking to historic levels? Let's take a look. Oh, and you thought I was going to talk about Apple, the company. No, 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 no. I'm talking about Apple, the fruit. And the apple frenzy is gripping China as the country's recently launched futures for the fruit hit a fresh record high on Wednesday, attracting nearly $60 billion of funds inflow. That's close to the combined turnover for the Shanghai and Shenzhen stock markets. Since the beginning of April, the price for the October delivery contract has soared around 40%. Well, if you live in China, there's not much you can invest in. So this week, it's apples. Next week, who knows? Well, let's take a look at our markets. Here we are with the 20-year monthly chart on the spiders. And as we can see, we look like we're doing a little bit of a bottoming here at this point and perhaps turning up. And this is above the 20 EMA, so things are still relatively strong. Moving here to the back, you can see the sideways move in the fast line. I expect that to turn and then head up in this direction, getting a reflection off of the slow line. Not much change in the MAC histogram. It looks like it's slowing down, but not showing much of a sign of a reversal yet. The momentum indicator does show a little bit of a reversal at this point, so hopefully that carries forward. Price rate of change, just a slight turn, not much of an indication there. Relative strength does also show the bounce at that point, and it's heading up. Stochastic, slight change there. Volume, moderate. Moving here to the Williams. Williams also shows the bounce and then the upward movement. So heading back up here to the price chart. And once again, after this recovery and after we start heading up, if it gets back to the previous high at this point, perhaps a little bit further over in the chart, that's when I really want to take a look at the charts to see if there's any issues, because that's where I believe some of the problems may lie. 6-month daily chart on the spiders, and last time we talked in the update, I said at this level here that we would probably have some hesitation, which we're getting right now. And based on the MACD, I expect perhaps a little bit more hesitation, some sideways movement. This is looking very similar here to this move down here. I'm not sure if we're going to pierce through on our way down like it did here. It's always a possibility. Moving into the histogram there, you can see things are dropping. They're not dropping real fast, so I think we're going to do some sideways, perhaps some downward movement. Momentum looks fine. It's above the zero line. Price rate of change, also a little muddled. Looks somewhat similar to the chart did back here. But we haven't gone through the slow line yet, so we'll have to see if there's any downside. That's going to happen next week if it does, so we'll pay attention to that. Relative strength does look like it's heading down, but not necessarily convincing. and the stochastic as well. Fast line just popping through the slow line there, but we'll have to wait and see if that does bring any further downside to the prices. Volume moderate, and the Williams looks like it wants to head down too, back up here to the price chart. So we'll see. We talked about this as being a possible breakout, at least in a technical, a formal technical sense. They would say it's a breakout. I'm a little hesitant to say that because we perhaps do have some more downside here. So I'm not quite convinced. Maybe we come down here and bounce off of the 20 and the 50 EMAs. We'll have to see what happens next week. I'm still a little hesitant on calling it a full breakout because I see some probability of it breaking down, the price breaking down and moving a little bit lower. But let's go to the 1 week chart, or excuse me, the weekly chart, and see what that shows. 2-year weekly chart on the spiders, and I'm showing this chart the last because I think this is where the key is to the markets, and the weekly is where I see also the strength. We have a very good dish occurring here, and of course if you want to do the trend lines like that, my trend line's not all that great, but you can see that it just popped. But I'm not, again, going to call that a breakout yet. But I do see some strength. And as we move down here to the MACD, we can see that. And you see that the fast line is attempting to bottom here. It hasn't moved through the slow line, but it's on its way up. It wants to do that. It's just having a little difficult period. And we go back here, and you can see that we did head down for probably almost 3 months. So the recovery is going to take a fairly long time as well, long time being a few months. So be patient. It looks like the histogram is improving quite dramatically. The momentum as well shows improvement. The price rate of change looks like the fast line just popped through here, the slow line, and it wants to improve as well. Relative strength above 50. Stochastics popped through last time and it's continuing on up. And the volume's fine. And then the Williams, lastly, a good bottom here and continued strength all the way up till today. So again, the weekly chart is the key. All of these oscillators are in sync, telling me that the market wants to head up. It's just that it's going to take some time. So we keep watching this, and we may have a little bit of weakness here, as I said, from the daily chart, but it looks like the overall market wants to head up. It's just having a bit of a struggle here. There's some buyers and there's still a lot of sellers that are unconvinced of the direction that it's going to go. I think it's going to head up. The probability is that it's going to head up and perhaps get back to the previous high. And again, at that point, that's where I want to see if there's any trouble. We don't have clear skies yet. We can have perhaps a little bit of sideways trading, a little bit of downward trading, but ultimately I think that the weekly is going to take over and the market is going to start heading up. So just be patient. And for today, that's ChewDog Charts. Thank you.